Morning, everyone. Thanks for coming. Jenny, I've known you for quite a few years, and it's impressive the traction that you've done at Wintermute. You are, for all intents and purposes, the largest crypto-native market maker. Is that right?
Yeah, sounds about right.
So you trade a lot of volume. You're constantly looking at markets, centralized exchanges, decentralized markets. We're obviously going to talk about FUD, market integrity, what works in crypto. I'd like to just maybe start for everyone in the audience to kind of level set, like, what does a market maker like Wintermute do in crypto today?
Yeah, so I guess like on the most basic level, it's about liquidity provision. So starting with centralized exchanges, what we primarily do is programmatically provide bids and offers on screen so that markets can stay on one hand liquid, so that, I don't know, if you guys want to buy, there is like a pretty healthy offer there. If you want to sell, there is a bid. But it's also about that whether you trade on, I don't know, Binance or Coinbase or Kraken or Uniswap, you will basically see exactly the same price everywhere. So our primary function is to make money on making sure that the prices are just aligned across all exchanges. And that's where you see pretty much the biggest chunk of our trading volume coming from.
Yeah. So capturing this arbitrage, people might say, wait a minute, like, why are crypto markets so efficient? That naturally generates a lot of FUD sometimes. You know, maybe the price of Zcash in one exchange is really high or different than any other venue. And there's reasons for that. Tell us why FUD and kind of market inefficiencies, kind of what is the state of the crypto market? If you were compared to like traditional markets that are fairly efficient, how does crypto as a whole operate, and is it relative to like a traditional market?
Yeah, I think like the FUD is ultimately kind of the same everywhere, to be honest. Like, it's not basically blaming different actors. It's not that different in crypto how it is in TradFi. Like, I remember when Terra collapsed, like one of the most ridiculous FUD stories was that the BlackRock was behind it, which basically, like, if you know what BlackRock does, like, you would know like how ridiculous this claim would be for them to be involved into something like this. But nevertheless, people just like, okay, there is this big company, maybe it's them. If you look at, for example, like CEO of Virtue, Doug, like he is very vocal on Twitter, and I remember like a year and a half ago, or 2 years ago, like he's been replying to every single like FUD person who basically like people were thinking that Virtue is, well, which is like, I guess like very, very similar to FUD we are getting, as basically like that Virtue is just shorting all the stocks. And again, they were just basically ultimately misunderstanding how basically balance sheet works, because the balance sheet is public, because they're a public company, and they were just misinterpreting what was in the balance sheet. And in our case, it's like on one hand, like we are one of the largest players in the industry, and so it's kind of like unfortunately natural for people to ascribe all the things that happen in crypto to big players, I don't know, moving markets, doing stuff, instead of just market forces doing their work. And on the other hand, it's basically it's like a function of blockchain being very transparent. So I don't know, for example, price of a token on Binance might start going down because somebody's selling on Binance, which is normal. And then us reacting by, I don't know, selling the same token on Uniswap or some like pool on Solana, for example. Mm-hmm. People basically see that and they assume that's basically causing the drop, instead of like reversing intuition and like thinking, okay, if somebody wants to sell, they'll probably sell it on the most liquid venue there is. And basically people misinterpreting what's happening on blockchain has been like the biggest source of FUD for us for the last 6 months, I would say.
Yeah. People forget, look, in traditional finance, there was a lot of inefficiencies. It's compressed as the market has become more sophisticated, number of players, technology. I mean, people are spending all this infrastructure to get closer to exchanges, like milliseconds matter. Capturing arbitrage is not in and of itself a bad thing. It's actually making markets more efficient is a good thing, and there's people like you that do that. A lot of the conversation in crypto is MEV. And MEV can mean a million different things, and some people say that's really bad, that's toxic. What would you say to that, like in the context of like integrity and creating more robust crypto markets? Like, what is your position on MEV for some of these chains?
Yeah, I mean, we could spend like 20 minutes easily talking about this. It's a really fascinating topic. Like for me, well, I would start with MEV is here primarily because the blockchain design made it possible. So a lot of people, for example, inside the Ethereum ecosystem, but also other ecosystems, complain about MEV being there, complain about people, well, certain actors taking advantage of it. They, like, to me, it's kind of ridiculous because it's kind of like a self-inflicted wound. Like, you have Uniswap design, you have as part of Uniswap design that somebody can basically sell something or buy something with 100% slippage, and that's why MEV is here in this particular case, because like somebody will look into it and front run this person who just set the slippage too high. It's just basically a function of how both Ethereum and Uniswap work. Like, there is no way around this. But that being said, like, as a market participant, you still have a choice to, well, for lack of a better word, like exploit some types of MEV or not. Like, we made a choice very early on, for example, not to do sandwich attacks, because like we thought, okay, like that's just bad. Like, we know that it's happening, but we decided not to do it, primarily because it's very public, like all our wallets are public, but also it's just, I don't know, it's not nice, kind of like to retail, like. But other types of MEV, like just-in-time liquidity, yes, that's what we do, because we have basically competing with this like passive liquidity providers on IMMs, but we do give a better price, better execution to takers. So we think it's basically fair game.
Is there a particular, through this lens of MEV, there's some chains that might say, hey, look, we're just better design-wise, latency-wise. Is there a particular chain that you think is very well suited if you think, okay, if large institutions are going to come and trade, if like the liquidity, the activity is going to really centralize like in a particular chain, whether it's Solana or some other chain. Do you have a view on, from a technology standpoint, which chain is like more equipped to handle like kind of the future of finance, so to speak?
Not really. I think it's still way too early. Like, I think all the chains that are currently out there and some of the chains that are going to be launched this year, for example, they still have like a long way to go. And both Ethereum and Solana can still continue developing massively and rapidly. I also hold this view that none of the existing chains and potentially like none of the future chains really can handle stuff like Nasdaq, for example. It's just something that maybe can be done by app chain on top of those chains, but not by like a native L1, for example.
Yeah.
So it's an interesting topic, but like I definitely don't have like a winning chain in mind.
You operate across chains wherever inefficiencies exist.
Like, I'm ultimately, well, first of all, like philosophically, I guess I'm very multi-chain person. Like, I know this view was like popular a few years ago, but I'm still kind of sticking with it. And it plays very much to our strengths as well. Like, we want to see more competition across centralized exchanges, across DEXs, but also across chains, because that's ultimately where our strength is, in this like more fragmented, but also more like competitive market. And I think it's good that Solana is trying one thing, Ethereum is trying another thing, and I don't know, Mega East and Monad will do another thing, and yeah, its competition is good.
Yeah. We've been going for half the session. I'd like to transition the conversation more to, obviously, we're in a very different regulatory environment this year than we were last year. What's your optimistic case, or just like house view in terms of market integrity from a regulatory policy lens that you might say, here's the things that are coming that are going to make markets more efficient, are going to convince more BlackRocks of the world to come? Like, what do you think if you were to wave a wand and say, this is how I would design policy, and these are the things that I would really be focused on for any regulator out there listening? Like, what would you kind of tell them?
Yeah, I would say, to me, I'm much more excited to bring more normal people on chains than about necessarily bringing like institutions. Like, institutions will come anyway, and like the way they will come, it's not necessarily like the most interesting for me, even though like we are involved with quite a few of them with their experimentations and like basically what they do on chain and beyond. But when it comes to, well, let's say like normal people, retail, what we see regulators are doing, for example, in Europe, like with MiCA, like any exchange that would list the tokens, they would have to do massive amount of disclosures about those tokens, which I think is a very good thing because it's currently like very much lacking. And I'm very conscious that like lots of retail people will never bother reading this stuff, but having possibility to read and I personally think it should go like very deep. Like people should know not just like this pie chart of ownership, which everyone posts now, which is not, quite often not even true, but they should know. Like I personally think that they should know about what price like all the major investors entered at I don't know, seed round, Series A, Series B, basically like what is the like cost basis for most of them. I do think that it would be very good if everyone knows the details about the market making agreements, for example, because that's also like on one hand there is, well, you want to know how many market makers are involved, how much of the token supply is given to market makers. You want to ideally know at least some details about like I don't know, all these like call options that are part of it. And the big challenge for us is like I would love this stuff to be public, but it's kind of like two things. Like if, first of all, we need the protocol to agree to it, not just us, to make this public. Like we cannot just disclose things, like most of the times they're just NDAs behind them. And on the other hand, if we are the only market maker who discloses those token agreements, it just puts us at a disadvantage with other market makers who just don't bother doing it. And so it has to be driven not by us, but basically I think there are like ultimately three different forces that can do it. It can be exchanges or like trading venues that basically can force those disclosures upon the market. It can be regulators, and we see like Mika, for example, doing things like I'm actually pretty cautiously maybe, but look, I'm pretty excited by the current SEC regime in that regard, basically what Hester Pierce is doing, about basically like the basic set of disclosures that protocols can provide to SEC to basically, again, to inform the public better. And finally, maybe we'll see some kind of like third-party intermediary rating agencies, something like this, that basically either gather this information or basically allow protocols to supply this information to basically demonstrate to the public, okay, we are more transparent, like, I don't know, we are in L1, and here is our pie chart, and here is the market-making agreements, here are the investors, and like, we are better than this other L1 because we're actually transparent about those things, and they're not.
Yeah, I mean, in traditional markets, you have something like Edgar SEC, which is a central repository. If you're registering to list, an IPO or any sort of announcement or anything, it's a very centralized venue, and the regulator likes that because market integrity is everyone has access to the same information at the same time. And crypto is sort of a dichotomy where you have like it's open source. There's all these discords. If you're in the community, there's a lot of stuff that's being disclosed there. And then you have Twitter, and you have all these different venues. So it's not like sort of need a central repository. Your point around exchanges is good. Like Messari tried to do this, but failed. Exchanges actually require this information, but don't publicly disclose it. It feels like it's the regulator that should step in and say, here's kind of the best practice. Or as an industry, we come together to create best practices. What are you guys doing at Wintermute to push this forward?
Yeah, so I guess on the regulatory side, we basically became a lot more involved with regulators, basically helping to guide them like where we think the disclosures regime should go. Like my perfect disclosure regime is basically protocols submitting this data to, I don't know, SEC or FCA, like whoever, and basically it ends up being completely like, okay, you can submit it, you might not submit it, but if you don't submit it, then, I don't know, put on your website just like, this, I don't know, cigarette packs, like, okay, this will kill you. Like, if you don't provide this, then you have to put like big red, I don't know, statement on your website. We are not like submitting anything to SEC, so buy this at your own risk or something like this. I think that would be kind of ideal, because then as a retail investor, you can just make a choice, okay, you go and buy a token with full disclosures on the SEC website, or you go buy this like crazy thing, which is where you're completely not protected by anything. Like that would be ideal, but I'm also, realistic enough to not think that's where regulators will end up going.
Yeah, that's fair. So we're here next year. What does the market integrity and structure look like from a policy standpoint and from a what it means to your P&L in terms of being able to capture like a viable business of these inefficiencies. Kind of walk us through what your best case or just your operating assumption is for the next 12 months as it relates to market structure and your business.
Well, I guess start with operating assumption. I don't think much will change because it does take quite some time for regulators and like lawmakers to actually enact stuff. Like even if you have some laws happening this year, which is possible, like there is a market structure bill in US, for example, currently being discussed. Like it will still go into effect like 1 or 2 years from, well, at best like 2 years from now, I think. So it will just take time because they will have to give protocols and other market participants time to adjust to it, time to apply for this new regime. So like we won't see that much next year, but who knows, like maybe we'll see some, I don't know, maybe SEC will enable some kind of like semi-obligatory disclosure regime and we'll see some movements there. Like that would be quite interesting.
We got some extra time, so it's not directly related to the topic, but it's something that I think is really interesting as an industry, which is there's a lot of talk about tokenized stocks and bringing equities on chain. Why? Because the rest of the world can't easily trade Apple, Nvidia, Tesla stock. What's your position on that, and how does Wintermute capture that flow? A, do you think it's going to happen? What does it look like, and what's your role in that process?
I think it's definitely going to happen. Like a very interesting like decision point for a lot of stocks, I guess, is basically like big part of why SEC will never be like super friendly towards tokens. I think ultimately is like we play this like we do this dance of like saying okay, tokens are like valueless governance tokens, like there is no like value in them, but ultimately like we all almost like see them as equities in the end. And I think what a lot of regulators don't want to see is basically a new company or even existing company. Like they don't want Nvidia to just issue a token if the token regulations will be much more friendly than equity regulations. So coming like to tokenized equities, I think we'll see like regulators being very protective of that and them trying to kind of like figure out, okay, how do we deal in this world where, North Korea can buy Nvidia, for example, or steal Nvidia from somebody, or I don't know, Russia or like whoever else, like can just buy whatever equities they have, like receive dividends from these equities, maybe even participate in governance for those equities. Like how do they square this down? Like will it basically result in all those equities being completely like KYC gated, so it's like permission pools only, or is it possible that we'll actually see like completely permissionless nature of this, which again, like for us crypto native people would be ideal because it removes a lot of friction and also opens up those instruments to people in like developed countries who currently don't have access to them. But it's just really, really hard. On Wintermute side, we're very much looking to participate in this. But it's really dependent, and I'm not sure like it's like 100% solved. Like it's really dependent like how it's going to be solved on regulatory side.
Yeah. I know we're wrapping up on time, but on a more personal note, you've been in the industry for many, many years. You built one of the most impressive firms. What is something that, perhaps for the audience, you wish you knew when you were starting in your crypto journey that you know now to be true?
Yeah, I think like number one thing is just, competition is overrated, I guess. Like not in a, it might sound like a bit like, I don't know, high and mighty, but you basically like, you should never think that you should not enter the market because it's, I don't know, too competitive. Like ultimately, so much of it comes to perseverance, so much of it comes to basically doing things very different from your competitors and not being like too afraid to experiment, not being too afraid to like move fast and just try new things. Like I would say like first couple of years of our existence, we moved way too slowly because we just were too afraid to go into areas which we thought were too competitive. But in reality, like the pie was way bigger and there was just like so much more opportunity to just do things differently, which we ultimately did, but we could have done it much faster.
That's awesome. Well, it's a great word of encouragement for everyone out there. Maybe someone out there is going to build the next market maker. So
yeah, no, we know people are doing that, yeah.
Great. Amazing.
Right.
Thank you so much.